All right, welcome everybody. So let's get this study session going. As per the plan yesterday, I was looking for another 80 to 90 cent stock doing a stair stepper pattern, and that's exactly what we got today. I almost totally nailed it, but I took, basically a good chunk out of it. But again, you're going to see I pretty much almost nailed it perfectly. So yesterday we had MNPR, and this is what it did. You had that early spike, pulls back, which showed that it had the strength and it had the volume. And then we get the stair stepper action. And that's exactly what we were looking forward to today. Since I saw that yesterday, I took this trade, which was pretty decent. We reviewed it, and just to go over it again, saw the site, we saw the big spike, let us know it was strong. Then we had the pullback, sideways action, and we broke out of the sideways action and had a nice little stair stepper. Obviously, the more volume, the better the stair stepper is going to be typically. So that's something to keep in mind. But again, let's get into today's action. So today I noticed we had Kara, which made a big move. It kind of pulls back, and lo and behold, we get the sideways action, break out of it, and I took an entry right here, and I ended up taking a small loss right here. That's just what happens. I wasn't upset. I thought to myself, well, maybe there will be another one, or hey, this one might just hold up. And we've seen this on some of the other ones where you kind of get this wedge scenario where you can kind of get in around here, and then if it proves, then you're onto something. And that's exactly what we got. So basically, I saw this nice sideways action, got in right there at 90 cents. And yeah, I was risking 87 at first, so I had smaller size, wider stop to start. But then, it's a little sketchy at first, not that much volume, but then we get a nice pop up here. And then we had this really nice sideways action with pretty decent volume, in the 30,000 range, 20,000 range, sometimes 150 range, but decent volume. And of course, I was looking to get it right here, but I didn't get it. I was trying to add, and it was just, I don't know. Sometimes people are a little bit faster than you, I guess. I was sitting here watching it for about 3 or 4 minutes, and I clicked the buy button at 96, even though 95 was the entry. So I gave myself a full cent of slippage, and then lo and behold, it's still, the best uh, entry I could have got was 98. So I didn't add there. I'm not going to chase, but what happens? We get a nice spike up to one, and again, I'm long from right here, so I'm up a nice amount, and we get this nice little sideways pullback, and I can move up my stop. Let's make that cleaner. But yeah, I can move up my stop, of course, so I'm able to take much more size, knowing that I can just risk half of the winner, and if I lose, well, I'm still a winner. So I add with pretty good size there, but then we get some more sideways action. So what I do, move up my stop, add again, and then we get a huge run. And then I scale out because I advise scaling out, just up into the spike, and then all out. And that was a really great trade. If I would have got this one, only risking like $25, and then from that point it was risk free because I was only risking half of what I was up on, I would have made nearly $1,000. Unfortunately, I only got these two extra ads, and I made about 300 on it, so not bad. Only risking $25 the first time, and then risk free. Someone with a little bit more size. Again, this is how I pay my bills. It's the only way I make money right now. But again, someone that, and if we get on a little bit more of a roll, I'll be able to size up. But you've seen the last few days, it's been pretty slow. So The slower it is, the more I size down. The more I win, the more I size up. That's how I protect myself. So I had this nice trade, and then basically I just logged off. Um, I also had another trade, it was a good one, but it's basically how I protected myself from a loss, but I got a small victory, and that's something that took me years to understand, and we'll get into that later. But I also wanted to get into some more stair stepper action from 90-cent stock. So we see this stock make a move up, because now people saw Cara work, CARA, and people are saying, well, I want the next one, right? Okay, well, this one was pretty straightforward too. I mean, right here, you don't want to touch it. There's nothing to it. But then when you get this nice sideways action, that's where you want to get in. You're buying there, risking there. You get in here, and then you move up your stop there, add here, and you just repeat the process because the sideways action and the nice volume, that's really good volume. 40,000, 20,000, 15,000, 80,000. Good stuff. And that goes from where you're originally in at 98 up to 115. So that's actually even the better trade than mine. Even though this looks better, this actually worked out better. But yeah, so that's kind of how that works. You see something that works well in a theme that's been working at a certain time of day, work a certain way, and then you go look for other stocks trying to do exactly the same thing. And you repeat that same type of process day to day as well until something else starts working, and that's kind of what this whole Okie study session is about. We're going to keep staying in the loop, in the know, while everybody else is wondering why their patterns aren't working well. We're adapting every single day. We're catching on to what is working. So we saw that. And then basically there was nothing else for the rest of the day, pretty much as far as these 90-cent stair steppers go. But our goal is to catch the one or two a day that works, and some days there's four or five, you know. So, but I pretty much just going to take one good trade because 1,000 a day. I mean, that's all I really need. And if you size into it correctly, that could be 2,000 a day, 4,000 a day. And I don't know about you, but I don't need to make $1,000 on a trade and then the next trade give back 200 of it or something like that. It would annoy me if that makes sense. But later in the day, because what did I talk about if you paid attention to the last Okie study session? For the people that have to work early and then maybe they have these midday to late days off. Well, this one around 3 p.m. So it was at 2 p.m. 2 p.m. Central, 3 p.m. Eastern. You had another one that worked, right? So I thought, well, you see that probably today there's going to be another stock that's going to make a big move. And what do we get? And it was nice too because you're already looking for these 90-cent stocks and you're wanting to look for them around 3 o'clock. That's 2 p.m. Eastern. And this one's a little bit before, but as you can see, it's really doing nothing all day. And then you get this end of day move and it goes from 90 cents up to 225. Now, there's no really way I say you could play it that well. I mean, the only way is if you're really good. Like, you notice this huge spike, right? And then we have high of day right here. I mean, we also have this one. Like, you would think that maybe over this one, it's probably going to get over this one. And then over that one, it's going to get over that one. But you would like to have some, sideways action close up to this for that to be ideal, right? But you notice it spikes through, you don't buy it right there. It pulls back. You say, okay, we're going to get some sideways action. But no, it's so strong, it starts to spike back through. Maybe you take a starter. And then you see it's going to break through this one. Then you add some more. Then you see it's going to break that one. You add some more. Like that's how the true pros do it. I'm not that good yet, but you know, maybe in a year, 2 years, I will be because this is a life game for me. I plan to do this until I'm, you know, 90 years old, however old I get to. But the point I'm bringing up about this one is, so you see this and you don't trade it, right? What happens? It's a 90-cent stock, end of day, and you're thinking, oh, well, I missed it. Instead of crying about it, think to yourself, let me go to my screener. Let me look for 85-cent stocks to 90-cent stocks. I had to put it at $1.20 so I could find the ones that did go from 90 cents to like, over $1. And we're seeing some of these stocks here. So let's pull some of those up. ZVSA was one. After OSHA happens, you scan for stocks in the same price range, and lo and behold, you get some more sympathies, right? You get the stair stepper again. So you see a stock spike up, here we go. And you just keep adding, and look at the stops keep moving up so cleanly. And then you get the parabolic, you're going to want to sell some into there or all, and then you get another one. And you can add on these too if you're good enough. But you get the nice move, and you're thinking, well, that's all. Maybe I didn't take full advantage of that. Well, you get another one. And this one's in after hours. So you do have time for it. If you see how like the crowd moves from one to the next based on the time to the next on sympathies, and this one just kind of everybody knows what's happening now. So any 80-cent stock that's catching really good volume and 30, 70, 250, 100, like boom, boom. Like you can see how like it's just going straight up. And I thought that was pretty cool. So even the end of day folks had some nice stair stepper action. And that, like I said, usually when you have a good one start the day, there's going to be a good one to finish the day. And there was actually like four. So tomorrow, actually, I probably will be looking at end of day just to see. Well, not tomorrow, but Monday. Monday, I'll be looking at the end of day just to make sure that I'm not going to miss out on some free money like this because that's basically free money. You see a stock pop up that's 80, 90 cents, you buy 5, 10,000 shares onto the spike and it goes higher than your entry, you keep holding. If it starts to go lower than your entry a little bit, you cut real quick. And then if it starts to hold that dip, you hop back in and then you see it spike, maybe you start to add. That's how you kind of play those sympathies because you know that they're just going to keep spiking. So that's kind of one of my goals for Monday is to catch the early stair stepper, but really I'm going to be focused on that last 1 hour of the day to look for some of these nice end of day stair steppers now. And I'm just doing what the market's telling me is working, if that makes sense to anybody. But I also saw some higher price stocks, so I thought we'd check that out. We had another nice wedge here. And what's cool about the wedge, again, the way I approach it is I let the volume tell me where to enter. I'm avoiding this wedge. I'm avoiding that wedge. I'm even avoiding here. I'm mainly looking to catch it like right here, but since it broke this upper trend, I did buy it here. I would have bought it here, risking here. And you can see it holds, and as long as it's holding, and then when it finally spikes through, we get the volume burst. Typically, the volume burst is going to go with the break of the wedge. But again, you can see the nice move that it made. What is this? So you would buy 196, risking 178, so like 20 cents, and then so you would want $2 if it went 2 to 1. It almost gets there. It goes like I would say at least 6 or 7 to 1, which is still really great. And again, I'm not looking to trade them yet. I'm just looking to see what's actually working on the day. And then if we start to see more of these, well, then, if I see a bunch of these wedges Monday, then Tuesday I'll definitely be looking to trade them, I guess. Small size, just to make sure it's not a fluke. Because we know the penny stair steppers are working. They happen pretty much every single day. But yeah, we had another wedge here. And again, the volume on this one wasn't perfect, but you can see how you could draw a line and look how the it breaks the wedge at the same time it breaks the volume wedge. And this one's pretty good for sure. 162 versus 157, so 5 cents. So we have a 50-cent target. So we'd want what, 210, and we easily get that. So that's over 10 to 1. So that's what we want to see. We also had VYTX. So again, we're seeing some wedges here today. Mainly low floats. If not low floats, they better at least have enough volume to rotate the float, if that makes sense. I should probably quit saying that, but I really do hope these things that I'm saying are making sense. If you have any questions, you can always hit me up. I'm in Small Cap Rocket, so don't be shy and go in there and drop me a question if you ever have any questions about anything. But here we go. 6 entry, risking 594. So you want 60 cents. You risk 6 cents. You want 60 cents target. So 660. Doesn't quite get there. Pulls back, holds the stop, and then definitely hits 660. So there's your 10 to 1. But notice this. And again, it breaks the wedge with the oh yeah, I need to look at that for sure. Notice the volume wedge again breaks the intraday candle wedge at the same exact time. The wedge tells you when it's a good entry, when they both line up. It's one way to keep you from losing. Like you're not trading here, 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 or here because this volume wedge, like like if you had this line drawn from here to here to here, it wouldn't have been fooled up all the way to right here. So you need to let this whole triangle get filled up before or get really close to it before you're looking to buy. So you see it breaks here. I probably would have not bought here, but you can see how there's this mini wedge within the bigger wedge, and that's kind of why it broke here. People got a little overzealous. Maybe some shorts, early shorts got out there as well, smart ones, and then it breaks the big wedge, and then we get another volume burst to help show you that, yes, this is a really good trade. 650, risking 640 basically, so we'd want $1. So we'd want 760. And it doesn't get there. But on this one, you get a spike and you're definitely not looking to sell it. It pulls back hard and you're like, nope, I'm not going to cut here because I'm just going to hold my risk. And then we get a nice spike back up, double tops, and it really starts to pull back. You just go ahead and cut it. Like, there's no point, because if it does hold up from there, you know, you can always start to look for another new entry, possibly. But again, we're not looking for these wedges. I'm just trying to familiarize everybody with them because we're starting to see them again. And eventually they'll become even easier and we'll start to make really good, or, I know I will. I don't know about y'all, but I know I'll make some good money off of them because this is one of my favorite setups. And we're 10 to 1. You can't sneeze at that. Risk 100, make 1,000, you know, and you can do it 3 times in a day. So risk 10, make 100. Now you could risk 50, make 500, and you've only risked really 10 to start the day. That's how you can make a good day. You make $600 only starting off risking 10. And then the next day you could risk, 50 of that to start the day instead of 10 and you make 500. And then now you can risk 250 on this one and then you make 2 grand. Like, and it all started with a $10 trade. That's the power of the wedge. The problem is you can also really get your butt kicked on them. But we're going to wait and we're going to let the market tell us it's time to start trading the wedges again. And we're going to keep our eye on them. All right, now we're done with those. So we had a good amount of examples. It's like three good examples, and that's exactly what we want to see. So Monday, again, if we see 3 more wedges, then, we're locked and loaded. We're ready to go for trading some wedges on Tuesday. But so far, every time I see a good day of wedges, we don't see another day the next day. But with these stair steppers, they pretty much, like I said, every single day, day after day after day. So, something I wanted to go over real quick for any of the real nerds that like to study here, because you could just log off because we've already gone over like basically what I'm looking for tomorrow, which is, those 80 cent to 90 cent stair steppers. That's that's what I'm gonna be looking for Monday. That's what, worked for me on Friday today. I'm gonna be looking for that again on Monday until, it doesn't work and then something else starts working. So, but so yeah, you could stop watching now if you want, but I wanted to go over um MMPR here. This is a multi-day breakout, yes, right? You have a big spike, and then it's holding up, it's hanging around, as Tim Bowen likes to say. And then some people were buying in the 150s thinking it was going to go to, 250, right? Well, the problem is you would be buying a breakout over a red day, and not just any red day. I mean, look at that's a terrible red day. All of these people, anybody that bought on this day is basically underwater unless they're trying to hold to get back up to right here, their break even, right? So some people that are real scared are selling out, selling out, selling out, selling out, and then, some of the luckiest of people that held here, when they finally got back to break even, sold. And that's why there's so many, bag holders in a stock like that. And that's why I don't buy breakouts. However, I did know that it would probably, if it did set up in a particular way, I knew that it would probably be a good scalp underneath the breakout level to over it, and then it would likely stuff because I don't buy breakouts over red days. And then that's exactly what happened. You can clearly see a big move and a big wick, and that shows that, you know, it didn't work. So, just to kind of zoom into the intraday action here, we had the big spike, the pullback, and then you kind of got the stair stepper action, but I really wasn't looking for that. Again, it's an over $1 stock, so I would probably be looking for like the dips, or, I guess sideways action would be cool. You know, just however you feel like. But how I traded it was, what was the breakout level here? 156. Okay, that's right. So I knew that when it pushed up to that breakout level, or just right under it, and it had that, little triple top, and it pulled back, that once it held right here and started to curl up, that's where I got long. I just got long into this curl up, and then it pushed up through the breakout, and then that's when I sold it. So I got like 15, 12 cent gain on that one because I might have got filled somewhere right here. I forget. But I knew that, they were going to push it because this is the breakout level, 156. So I knew once they pushed up to it, held, curled, I could just ride that wave up into it. And then it actually had a nice little hold. But of course, you see what happened afterwards. It just stuffed, and that's exactly what I expected. Now I kind of wanted to show how you protect yourself on a good stock that just didn't work out. So we have EBS. It's a perfect day three surge. We have a big spike up on day one, and it's holding close enough to day one's highs that I think on day three it's going to at least test, if not break, and get to, like, if it ran from 170 to 320, I think it could go from like 290 to 380 basically today. Based off how far it ran on day one, I think if it breaks out, it could run that far on day three, or any of the days that it breaks out. Like if it held up for a few days under, then, whenever it breaks, that's how I think it can happen. It doesn't necessarily have to happen on day three, is what I'm trying to get at. But it held up so close to on the high of day one on day two that I was pretty sure that it was going to break out on day 3. And it didn't, you see, but I actually made a green trade on this, and let me show you how. So, when we zoom in here, let's just zoom in to like the day as it started, right? So it opens up, and typically I would buy something like this, first high of day versus low of day. But I mean, this is just ugly action, and the volume wasn't good, so I'm not like my goal isn't to be desperate anymore. It's just like take what is great looking and then do what is working and take advantage of that. So I said no to that. And lo and behold, it spikes up and fails, right? But it doesn't fail too much. It just barely goes under low of day and then has a nice little double bottom, curls back up and spikes. And I told everybody in chat, well, I'm not going to buy it if it just breaks right here because I would have to risk all the way down here. And then the risk reward is just crap. So I'm not going to do that. And I said, well, if it can go sideways for about 20 minutes underneath this high of day, the longer the better, but at least 20 minutes, 15 minutes at minimum, then I would buy it over high of day with the new sideways action as my risk. So, as you can see, it starts to go sideways, 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 20 minutes, and then boom, we break high of day. So I buy right there, and we're looking good. And the breakout is 326. That's the breakout level. I'm thinking to myself, I'm in a great spot. In at high of day, risking right there. I think, I'm in really early, and the real breakout level is at 326. So this thing, we're early to the party, and over 326 it should easily see 4. I mean, heck, it might even see 5. But I'd probably sell at 4 just because I tend to sell early. This is how I make my living. So but again, we get a nice spike, and I'm not selling anything because, it's early. I think, we're early to the party, but I do notice this is pretty stuffy action. So I get a little concerned, but we're holding up nice. And, you're never always just going to get a nice spike like this typically, and then it just keeps going higher and higher. You got to have some pullback, and I'm well aware of that. So, but we get this nice spike, right? And I know that this was some really toppy action, and I should probably lock some in. So what do? Once it starts to act stuffy, pulls back a little bit, and I sell 1/5 right there. And I'm just waiting, I'm hoping, I'm like, all right, well, you sold a fifth there, now it's going to go higher. But what happens? Nope. Pulls back, I'm like, okay, well, it held there, and now it's going to continue to go higher, right? Dang it, I shouldn't have sold. But good actions save your butt. And it pulls back some more. And now it's just playing games, and at this point, I'm not really sure what's going to happen. But we get this nice spike up to high of day again. And I'm thinking, all right, we're about to be cooking here. And it starts to get right up to high day and stuffs hard. And then I'm thinking, okay, now it's over. But I don't sell. So we've got this low here. The reason why I don't sell is because I need to either stop out under a new dip like this or a level that held for 45 minutes or longer. And we have this 308. And as you can see, it's held for about 45 minutes now. And soon as it breaks under 308, I cut the rest of my shares right there. And all in all, that was a good trade. And at this moment, I'm thinking, man, I shouldn't have cut. It's probably going to hold. I think I should probably add back here. But my rule is to wait for high of day to add back if it's going to break high of day, and I would just risk here. And yes, I would be annoyed that I sold all my shares here, but that's the rule. And what happens? It just keeps going lower and lower all the way back down. So, my entry here, sold some up here, the rest out right here, and that was a great sell. And that's what you have to do in this game. You just really have to have these rules and stick to them. And if it goes higher because your rules made you cut, so what? your rules are going to save you more often than not. And yeah, so again, my goals are looking for 80 to 90 cent stocks, but I'm always looking to trade these multi-day breakouts and see how this is a green day. I'll trade multi-day breakouts over green days, but not over red days. So I thought that was a pretty nice little teachable moment there. So that was a little bit extra, a little bit extra on the Okie study session there. So, all right, y'all. I'm gonna get out of here. I'm gonna go enjoy my weekend. Hope y'all do the same. All right, take it easy.